How will the election impact the M&A deal market for lower and middle market companies? Well, today I have my fellow growth thinker, Jay.Turo. He is the CEO, managing partner, and co-founder of GT Securities, GT Investment Management, and Growthink Consulting. Jay, welcome to the show.
Tim, great to be here. I consider this to be one of the most interesting topics in the deal market right now, which is we're in an election year. We have the prospect of a change in the fiscal policy of the country next year, monetary policy, and probably most impactfully for those considering either buying or selling a private company, changing the regulatory environment. No comment on politics other than who knows what the future holds. One thing we can be sure with a change administration, there's going to be new heads of the various regulatory agencies: FDA, FTC, Treasury, SEC. And what you have right now is you've got a regulatory regime as probably most impactfully, the Federal Trade Commission has generally taken a very anti-M&A stance and has slowed down very famously the Microsoft Activision deal, but that's one of many. A number of big pharma deals. They've gotten involved with things that they've never really touched before, like potential reductions of competition in the affordable handbag space. And that's put a bit of a pall over the market. It certainly slowed things down. The FTC has the right to challenge and to look at any merger that has a value, enterprise value of over $110 million, which in this day and age is a pretty low middle market deal. So you have a change in administration. Most likely, it's going to be a more pro M&A environment. And I will say that with the expectation, the probability of a change in administration going up because of the events over the last week with the election, that there is a sense, the mindset, while this current regime is in place, at least until next January, that there is the mindset, buy the rumor, sell the news. I've already seen a pickup, more activity, private equity buyers being more, a bit more assertive in reaching out and saying, hey, look, we got money, we got put to work. For those owner operators of businesses, this is a time, get something done between now and the end of the year on the anticipation, because who knows whether that actual regulatory change will make a difference. People are thinking that it is. So there's an opportunity to do something. So that would be my first theme right now, as I think the environment has gotten slightly but perceptibly better because of the sense there'll be a change in the regulatory regime come 25.
So we're talking lower and middle markets, but let's talk the lower for the first part here. So let's talk much lower. Let's talk the $20 to $50 million M&A transaction. How will the new administration affect them? I mean, it's easy to understand how, a new administration might affect something, the 100 million plus, more regulation and so forth. But how does this affect the mom and pop business?
That's a great question, Tim. At that level, that really isn't regulatory review. It's more of a cascading effect, right? So valuation's a big thing. When you have a regulatory overhang plus an interest rate overhang, that the bigger deals are done at lower multiples, and that trickles down to multiples across the board. And more importantly, it just creates a dynamic of people wait and see. Let's wait and see. And that's been what's been the energy that's really prevented, has seen M&A activity be reduced over the last couple of years, is this wait and see mindset. And that's certainly the sense that's easing. It's a incremental change, but it's a perceptive one. I could make a comment on interest rates as well, because this is probably far more profoundly impactful for the lower middle market company, if you wish.
Sure. Yeah, let's talk interest rates.
So, it's just this constant mindset that, hey, interest rates are where they are because inflation is high. Once inflation comes down, the Fed's going to cut interest rates. And once the Fed cuts interest rates, we're all going to live happily ever after. Maybe. There's also a world in which interest rates don't get cut for a very, very long time, and they stay at this level. And you know what? That's okay. That's quite okay. Because when you get under the data, the way the economy is structured right now, having high interest rates actually puts money into the economy in the form of savers getting 5% on their money markets, and before they're getting a quarter of a percent. Now, people say, well, you got the cost of borrowing, it affects mortgages, it affects the real estate market, 100%, that's all the case. But this is an important countervailing factor that is throwing hundreds of billions of dollars of net cash into the economy. That combined with the reality, Tim, that your elected officials, and my elected officials, all of our elected officials, on the fiscal side, are going to do nothing about the national debt, most likely the 34 trillion in debt, that the likelihood of getting inflation down to the magical 2% is pretty low. So that being the case, we could be in an environment of 3-4% inflation, whatever it is, Fed funds rate, 5-6% for a very long time. And that's okay. Deals can get done in that environment. I think people are seeing that now, recognizing that we can't wait forever for interest rates to come down. And the interest rate environment right now, you get the stock market up 16%, you got full employment, you have improving business and consumer confidence. We can live in this interest rate environment. The thought was that wasn't going to be doable. So that, in my opinion, creates a dynamic again where the pendulum, it swings between fear and greed. It's been in the fear arena for a number of years. Now people say, hey, we can make some money even with these interest rates at where
Right.
they are.
Right. And for the high net worth individual, there will be tax implications. There's things like tax reform and new policies in that arena. What are your thoughts I mean, we don't know what this new administration will be, but how do you feel the high net worth individual will be affected in 2025?
Well, there's the threat of a number of the 2017 tax cuts being rescinded, which, in the event of selling a business, could lead to some, more significant um, regular income and cap gains taxes on the sale of that business. So uh, I would, who knows where that's going to go? But certainly there is if a new administration were to come in, the likelihood of those tax cuts staying in place is far more likely. So I think that's a big positive. I always look at the states, like just in an era of mobile capital, mobile folks. Someone I know is moving from Los Angeles to Nashville soon, and that the digitization of the economy, that how can some of these higher tax states maintain those rates? And I don't think in the short term they're going to come down, but I think midterm there's going to be a lot of pressure for the Californias, the Illinois, and New Yorks of the world at some point to become more competitive with the states that are at zero tax and are pulling a lot of businesses from
Yeah,
them.
no, that's a good point. I mean, the entrepreneur, it lives between the world of spend less and make more. I mean, most people do, right? So when we talk about tax benefits in different states at a state level and being mobile, accessible, being able to generate income via your laptop and your cell phone, then the question becomes, where's the most advantageous place for you to be economically at some level? And we see a lot of businesses leaving. Do you think there will be a continued wave? Do you anticipate seeing a continued wave of business owners leaving those states that are less favorable for small business?
I think as that folks are going to consider it, they're going to do the analysis. Obviously, it's a Tim, as you know, it's a very large personal decision, an emotional one. I would just encourage folks to do the math and see, hey, what kind of savings could it potentially be, and at least have a specific number to compare that against the significant personal, emotional, life energy and cost to make a move like that. But I think folks that own businesses, they're already thinking about that. And I'm a bit of more of an optimist that competitive pressures that in some of these more, whatever you want to call it, more business hostile work environs, that it's gonna get backed off. I think I almost feel like we've reached the point where it becomes a competitive issue. You can't compete.
Right, right. And in any election year, there's a lot of you mentioned fear, and there's a lot of anxiety about who's going to be in the new administration. But let's not talk about that. Let's talk about opportunities. No crystal ball here, but we're just making some broad strokes here. Have you seen any activity in the market that's making you think things will change in 2025 in various sectors and industries?
Well, I think there are a number of low hanging fruit. Oil and gas would certainly be one where this a new administration would be more favorable to that industry. I continue to look at real estate on the commercial side that uh, the interest rate pain has been priced in. Potentially, the virtualization of the economy has been priced in. Things like conversions of office buildings into apartments and condominiums, things like that. I think those are very solid long-term bets that, as the market just adjusts to the new reality of hybrid work and of a higher interest rate environment, that you're going to get pricing is going to reach a point where there's going to be opportunities. So I think those are two sectors. Trade is an interesting one, right? Where that's going to go. I would probably be of the view that there's not going to be a gigantic, when all is said and done, after all the fire and brimstone is thought through, you didn't really see a big change in the country's trade policy from the previous administration to this one, in spite of all the talk, and whether that's going to and my gut would be that that's going to continue. So um, I think I would focus again on regulatory relief, creating some opportunity for smaller businesses to grow in a bit more business friendly environment, and then interest rates is, hey, this is the world we're in. Let's make the best of it.
Yeah. And what about, I mean, you touched briefly upon trade, but just general geopolitical risks, wars. I mean, there are wars still raging on. There's still a lot of fear around that, and that does affect Wall Street. Our hopes is that these things, come to an end.
Of course.
There's only so much we can do, and as business owners, we need to make decisions, especially now, like we mentioned, we're mobile, but we're also global.
Yes.
More
Global
global.
capital. The natural flow of the 21st century is for global capital, goods and services to flow. They
Mhm.
just flow. And we're at a point, really, 2000, and the pandemic helped this dramatically in the sense that, we're in the deal business, and before the pandemic, the idea of getting a large M&A deal done, a large financing deal done virtually without extensive in-person meetings and diligence would be unfathomable. Now it's somewhat the norm. I mean, across my desk every day, there are investors from around the world looking for companies and diligencing companies here in the States from thousands of miles away. There is in-person contact, but as opposed to it being 5 meetings, it's one, and everything then is done as we're doing here over Zoom. So that the pandemic shifted everybody's mindset in that regard, and that eased the global flow of capital dramatically. Now, we then had this move over the last few years, very mercantilist, right? Like the Chinese's stance, and then America and the Europeans' response, the tragedy in Ukraine, that this created, those two factors in particular really put a very significant damper on the flow of global capital. So I'm one of these old school economic interest prevail guys. That's just my, I'm an international relations major from the 20th century, and international relations. You study international relations, you study political science, you study history, and you study economics, and how those three come together. And in the end, it's all about the money. And when they say it's not about the money, then it's really about the money. And
Trying to sell you something.
and I just when I look at all of the entrepreneurship in places of the Chinese people, the Russian, the technological just prowess of the Ukrainian people. I mean, the Russian people. That in the end, that's going to prevail. That's
Yeah.
going to prevail, and that's going to of the Iranian people. That's going to prevail. That's more profound and more powerful than whatever we want to call it. The petty weak men that run these somewhat illegitimate governments. That in the medium term, there's going to be this recognition. It's all about the money. Let's do business.
Yes, yes. Let's talk just briefly about market sentiment. So there is a sentiment in the market today. I know we've been talking a little bit about where things may go in 2025 and new administration and whatnot, but you had mentioned buy the rumors, sell the news.
Yes.
What are some of the rumors? What are some of the things that you think are holding business owners back today? It's not just interest rates. What's your thoughts around like the anxieties getting inside of the mind of the small, lower to middle market business owner?
Tim, we've talked about information overload. We talk about the nature of modern media and how uh, the loudest, most negative voices get the haters, they get the attention, and that wears on all of us, right? It just wears on you, and it, in the end, as we all have a bias of, we have a fight or flight response, and that we all gonna every piece of for every piece of negative news we get, we need three or four pieces of positive news to offset it. That it does create the sense amongst folks that things are worse than they are, and
Mhm.
so I again, I'm an optimist. I believe what we've somewhat troughed out on that. And I just the world hasn't ended yet, and most likely it won't. And between now and then, again, let's make some money. And I think that's got to be the mindset. You and I have been doing this long enough. We remember times when the conversations were all very bullish, very optimistic, very techno optimist. The technology was going to change the world for the better. And I believe that when you actually look at what's happening, when you see $200 billion invested in AI, that's a sign that those that have the money are very optimistic. That they believe that there are there are opportunities or business growth and money making opportunities that would challenge the small business owners. Sometimes can feel they're this little ship on this crazy sea. There's an argument just as much that there's more opportunity for the small company today than ever, right? In terms of access to resources around the world and access to customers and markets around the world.
Absolutely. That's a great point. And it's so often overlooked that there's more opportunities today than ever before. With even the device in our pockets, we're able to do more than any other generation since beginning of mankind. Let's kind of bring this to a close here, just going back to M&A. I want to talk about what you predict for the remainder of the year for the M&A market, for the buyers and the sellers, maybe some recommendations as well. If someone's considering, but maybe they're holding off, what would be a recommendation or a reason why someone should not hold back and go deeper into the process?
I the evergreen recommendation is to every day prepare your business to be sold, right? Prepare it every day. A wise man once said, "What is the I got hit by the bus plan?" Right? Every day, be prepared to sell. So that is that's an ongoing evergreen guidance, and more businesses should the uh, take the position of let's go out there and see what an offer would be. We don't have to accept the offer. Almost too often, folks think if they go out and market their business for sale, they have to sell it. Let's see what the market. Let's actually get a reading on what the value of the real value, not a multiple based upon hypotheticals, but an actual someone comes and say I'm willing to write. Let's get to that point and see what where it's at. So that's an evergreen advice. I think now more than ever because there's a pretty good probability. You look at the betting markets politically. There's a pretty good probability that there'll be a more pro business um, administration in Washington in um, in 2025, and that's percolating into the markets right now, and folks are making plans for that. And okay, when I say okay, very important is who knows if it in fact will be more pro business. There's an assumption it will. It may or may not, but the assumption today that it is, that's the rumor. So go now before maybe the reality comes, and it's not what people think.
Yes. Brilliant. Brilliant. Great words. So if somebody is considering getting into the process, they should go to growthink.com. We could jump on a call with them, talk to them about their business. If that's you and you're looking for more information, reach out to us. We'll put our emails in the show notes down below. Do not forget to like, comment, and subscribe and follow along as we do more of these. Thanks, Jay. Very
Thank
engaging
you, Tim. Love it.
conversation.